On an average, 1 out of 4 people who retires will live up to 90 years, which is 30 plus years after retirement. So it is important for each one of us to plan for a retirement, but most of us don't plan properly for our retirement. If you see, people who do not have a proper financial plan will face various financial problems after retirement, especially like change in lifestyle, switching to simpler life, or there will be even situation where they will have no money even for necessary expenses. That's the reason sometimes retirement can become stressful. To avoid these circumstances, one must ask the following 8 questions to the financial advisor before doing his retirement planning. If you see, a financial plan for one person in retirement planning will not be suitable for others. So it is important to ask the right question to your financial advisor and to come up with the right plan that suits you the best. Hello friends, welcome to holisticinvestment.in YouTube channel. We help individual investors like you take right financial and investment decision. Your first question to the financial advisor will be like, how much of corpus do I need? Here the corpus refers to the required amount to accomplish your goal. Your lump sum amount should be calculated based on your current age, retirement age, life expectancy, currently monthly expenses, education, inflation, expected return on investment and medical expenses. For example, if you have choose the 1 crore package, then you have to see whether it is sufficient enough to get you a regular monthly income after retirement and to also lead your desired lifestyle and meet other retirement goals. If you have a family, then you can include your spouse and get a joint fund plan which will increase your pension fund. And if you have a family, then you have to increase your investment accordingly. Second question to your financial advisor will be like, what kind of investment strategy do I need to have in order to achieve my required corpus? Now you know the total amount of required corpus needed for your retirement needs. Now we need to ask a financial advisor for an investment strategy that will be able to generate your desired corpus. Completion of the package will solely depend on your financial planning. Your investment strategy should be consistent with your current lifestyle. Your lifestyle should include income, expenses, savings, inflation, debts and assets. Your financial advisor will be able to plan an investment strategy based on your risk appetite and also how many years you have left before your retirement. This will also cover all your expenses after retirement. So it is best to start your investment plan as early as possible, right after you start working. Retirement planning in one's 30s and 40s can be easily planned without much hassle or hurdle. You should also ask the financial advisor such as how much to invest per month in order to accomplish the desired corpus, and also on where do I invest the surplus income like incentives wisely, when to withdraw money from investment keeping in mind of income tax and goals. Third question to your financial advisor will be like, do I need to revamp my existing portfolio? If your current investments are not performing that well in the last 6 months, the financial advisor will guide you to adjust your portfolio accordingly. If not, then you have to compromise on your goals. To avoid this, the investment mix can be changed. This is where certain investors can get emotional and stressed, and at times it is also necessary to take the advice of the financial advisor. He will guide you from his experience. A financial advisor will analyze all the current investments, which includes insurance schemes, mutual funds, corporate shares, bonds, fixed deposits, etc., and find out which of these investments will help you achieve your financial goals. A financial advisor will also advise you to revamp your portfolio if there is a better alternative to fix the poor returns on your investment. The fourth question to your financial advisor will be like, how can I handle with my debts and loans? This is not a common question to all the investors, but most of the investors will have a concern regarding this. You may have a personal loan, credit card loan, home loan, etc. Ask a financial advisor which of these debts should be paid off first. Generally, the interest of home loan is low, so paying off other high interest loans first can be beneficial, as there will also be tax benefit for both principal and interest repayments. Borrow if only absolutely necessary. Generally, it is not ideal for any family to have more than 40% of their income in debt. Your fifth question to your financial advisor will be like, do I need medical insurance after retirement? Suppose if you take a new health insurance policy after retirement, then insurance companies may charge you higher premiums or sometimes even deny the policy based on your health conditions. And there is also a waiting period for critical illness if the policy is taken. Generally, to avoid these problems, we suggest that you take your health insurance policy when you are young and healthy, and also do not fail to ask your financial advisor about the type of health insurance you have to take while starting your retirement investing. If you did not take your health insurance before retirement, then you have to ask your financial advisor about the insurance policy that suits you the best after retirement. Generally, before taking any health insurance policy, these are the basic things we have to consider, that is premium, any medical treatment deductible, renewal, co-payment and maximum coverage limit. Your sixth question to your financial advisor will be like, how much emergency fund do I need post retirement? After retiring from work, you will not get a regular monthly salary. At the same time, your monthly expenses will remain the same, and it will increases every year. Your financial advisor will advise you to keep an emergency fund of 3 to 6 times of your monthly expenses to cover sudden cash needs like serious health problem or any other family expense. An emergency fund is essential for your expected medical expenses, especially like cataract surgery, dialysis, etc. The emergency fund should not be used for any other regular monthly expenses. A financial advisor will help you invest in emergency fund so that you can withdraw money quickly in case of sudden needs. Generally, a financial advisor will advise you to invest around 25% in a bank savings account for immediate withdrawal, around 25% in liquidity funds, and the rest in FDs and short-term mutual fund schemes. The seventh question to your financial advisor will be like, how can I do tax planning after retirement? This is a really important thing in our retirement planning. Taxes will become a burden to you if you don't have a tax saving strategy in the first place while choosing investment schemes. Many investment schemes offer tax exceptions, especially to people above 60 or 65 years of age. Based on your investment strategy, your financial advisor will help you choose the right plan from which you can save maximum tax on your investments. Your financial advisor will also do the tax planning, which include withdrawal strategy for your investments, and which will also reduce tax while you withdraw money after an expected time. The final question you need to ask your financial advisor is like, what challenges do people face after retirement? Ask your financial advisor what challenges they face in retirement. He will give you a clear answer based on his experience. Avoid taking emotional decisions when the market is down or up, especially a portion of your investment is invested in stock or equity funds. Don't take early retirement without proper planning. If you have less than 20 or 25 years to retire, plan a little more carefully. Plus, coping up with retirement expenses can be challenging if financial planning is done without taking into account the age of your spouse. Make sure you write a will in advance so that there is no quarrel between the family after you. Proper financial planning can help you lead a happy retired life. Ask your financial advisor these 8 questions, and the answer to these 8 questions will help you choose the right financial plan that caters to your financial goals and needs. A detailed review on this topic is given as an article in our website. The link to the article is given in the description below. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.